Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, good morning. Welcome back to another live stream. Hope you're doing well. And got some intro music for you. Hey, we got a new theme today. We're doing a fun theme for the month of August. We're doing Carnival theme, which kind of feels fitting on a day like today. It's a little bit of a clown show today, to say the least. We got absolute turmoil going on in the markets. S&P down 3%. The NASDAQ's down 4.5%. Gold's down 2.24%. What is going on, guys? I know that we're going to get a lot of people in here today. So we've got a lot of interest. And look at good old-fashioned VIX. Look at this, guys. VIX is up to 55 today. That is a 135% move to the upside. Oh my goodness. Crazy. Now, absolutely crazy stuff happened over the weekend here, guys. Well, not even over the weekend. The markets opened up, and you may say, well, where did this selling begin? The answer is the yen, guys. Have you seen the yen? Oh my goodness. How low is this going to go? Or really, a better way of saying it is, how high is the yen going to go? Guys, Bitcoin is down 14% on the day, losing $8,000 per coin on the day. What is going on? There's no shortage of stories for today. Today, my job is made very easy by this, covering this. You know, sometimes I get to the office and I'm like, I gotta do some research. What's going on today? Like, what can I find to talk about? No shortage of ideas to talk about today. Bitcoin down 14%. You got the dollar index dropping through the floor. The U.S. economy under pressure after on Friday's jobs report. You got the NASDAQ down 4.6. Ouch. Wrong again, Nick. Wrong again. This market has rolled over a lot more aggressive than I thought it would. The only saving grace for me right now is I'm currently short the dollar Swiss. Oh my gosh, this trade is going parabolic. My goodness. I got one thing working out. Dollar Swiss short position still in play. I trailed a stop this morning. We got a lot to talk about today because the stock market opens up in just about 5 minutes and everything is moving. Even gold down 2%. But Nick, I thought gold was supposed to be the recession proof defense. Well, that's not the case. Let me tell you why. So gold historically, and let me also preface this with, I am still bullish on gold. I like the idea of being long gold. I'm looking to buy some dips today. I like this dip. I'm actually excited to see the markets down today like this. It gets some great buying opportunities set up for me. And for others who, you know, may be willing to step in front of this. But you got to be careful today because, man, this thing could keep going. If you think we are oversold, then join the party, but we've been wrong for a minute now. I've been buying several different dip attempts and not working out. Here's the NASDAQ chart. Again, I have been early thinking, hey, we got a nice oversold, and then boom, drops further. Now you might say, well, Nick, aren't you trading against the trend? Well, I'm trading off the weekly chart for the NASDAQ primarily, weekly and daily chart. And yeah, now we've seen some real heavy selling coming into this picture. Breaking this key level of support really has me skeptical about the NASDAQ. I'm still bullish overall. I still like a lot of companies in there, but we might see a flush down past the 17,000 mark pretty quick. This thing is really rolling. So Lee's got it right. We discussed this last week. Why is gold selling off? Why is gold down? I know a lot of gold traders are in the room right now. Gold is selling off due to profit taking to cover losses elsewhere in margin calls. Bingo. You might say, why the heck is gold down on a day like today where the world is terrified of recession? Why is gold down? Well, because gold is the only thing that was up, right? So you got to think about this. Think about if you're a huge hedge fund manager and you just had the NASDAQ slide 5% on you, or you owned the Nikkei, which, by the way, guys, Nikkei, Japanese stock market, was down at 1.12 freaking percent on the day. Crazy stuff. So then you say, well, what about gold? Well, why is gold down? Because everything is going down, and people who have gold are maybe selling their gold positions in order to cover the margin or cover the situation on some of their other positions. Again, if you were super long the NASDAQ or super long the Nikkei, or you had, shorts on the VIX or whatever, you need cash. So what do you sell? You sell everything. Gold is included in everything, right? So gold is getting sold today, but I don't necessarily think that it's different than historically what usually happens. If you do see a real recession break out in the global economy, what usually happens is gold moves lower first and then much higher. Why? Because people sell it to raise cash in a global kind of margin call situation, which, let's face it, this might be that situation. I'm not saying it is. I'm saying it might be. But people might be raising cash with gold, selling something that's, they're selling everything. Everything is getting sold. Everything is sold today. NASDAQ, S&P, the Dow, Russell, even the dollar, gold, silver, oil. But before you freak out and say, what's happening? I don't get it. Nothing's making sense. As crazy as this market move is, it makes complete sense. It makes complete sense. When real sell-offs happen globally, everything gets sold. Gold, silver, oil, doesn't matter. Everything gets sold when real stuff happens, except for the VIX, right? The VIX is the volatility index. Volatility index is up massively. But again, look at yields today, guys. The 2-year yield is falling off the bridge. And, I'll say this now. I'm going to say this now for context. I would not be surprised. I would not be shocked if we see an emergency rate cut come from Powell. What I mean by that is that if you've never heard of that before, they have scheduled events where the Fed makes up their decision about rates, right? It is possible, and it has happened in the past, where a Fed chair can come out early and make a decision to cut an interest rate preemptively. There's a solid possibility, not a likelihood, but a possibility that you hear from Powell, you hear from the Fed, and they call a meeting and they actually decide to go ahead and do 25 basis point cut. It's possible. I'm not saying that's what I think is going to happen. That's what I think is worth thinking about. It is very possible that you get a emergency rate cut. What happens in that situation? Well, the market freaks out, right? The market freaks out most likely. If you get an emergency rate cut, it might cause a bit of a short-term bounce, but I'd be very, very concerned because if they cut rates preemptively, which they might have to, because again, now expectations are for 50 basis point cut in September, almost certainly. I mean, let's go look at the Fed Watch tool today. It is almost probably no chance that you get 25 cut. Look at this. So the September meeting, you are talking about, oh my goodness, guys, that is crazy. There is an expectation for, ready for this? 88.5% chance that you see a 50 basis point cut and no chance of a 25. And there's a 11.5% that you get a 75 basis point cut. Guys, if you see this, no bueno. Terrible, terrible news. Okay. Let me be clear. If you get a 75 basis point cut in September, it's going to be ugly. because a 75 basis point cut is going to freak out the market, because then it's like, oh, we are actually in a bad spot. At this point, a week ago, 2 weeks ago, I was saying, let's hope for 25 basis points. And that is no longer even a possibility, according to the Fed funds futures, trading. The bond market thinks there's a very likely chance we're going to get 50 basis point cuts, with a small chance that we're going to get 75. 75, guys. What has happened? No wonder the volatility is so high this morning. You've got the NASDAQ selling off 5%. The S&P 500 was down nearly 4%. And don't even get me started about the Japanese stock market. Have you guys seen this? Look at this. From peak to trough, right? Anybody got a guess? Guess it in your head. How much is this thing down right now? Oh my goodness. 25% down in less than a month. Ready for this? At one point this morning, 27.5% down in less than a month, ladies and gentlemen. That is serious selling. This is the Japanese stock market, and the U.S. stock market is following suit today, it seems. Gold down. I am looking at gold as a possible buy the dip opportunity. I will be very transparent about that. I took a trade on Friday, just took a loss on that one. Not a lot of stuff is working out for me. I'll be straight up with you guys. But one thing that is working well, my dollar Swiss position is a monster trade right now. There's one thing that's really working out for me. I mean, I do have in my safe account, my boring account, I have a lot of TLT and a lot of bond stuff. That stuff is rock star right now with yields falling off a cliff. TLT's up another 1.55%. Bonds are actually doing their thing. This is so exciting for boring investors, traders like me. This is exciting. TLT up today, 1.5%, doing what it's supposed to do, offsetting some of the volatility in my stock investments, in my index trading. TLT is a monster right now. I think I have a good bit of my safe account. I call it my house fund. My wife and I have a house fund, and in the house fund, we're looking at a nice, not a positive day, because there's also a bunch of consumer staples in my safe account, which are getting crushed today. Everything's getting crushed today. But TLT is seriously holding its own on today. So very nice. 2-year yield. Again, this is what's telling me, guys, there is a possibility. There's a possibility that we see a Fed cut before September. Not a certainty, but a distinct possibility. VIX hit 65. Yeah, look at that. VIX coming off of its highs. We'll see what happens from here. The NASDAQ, again, long wick off the bottom here so far, but I really would not be surprised if on the weekly chart we are headed to test this low here, just around 17,000. Big slide on the NASDAQ. It's one of those days you just got to sit back and watch all this stuff happening. It is crazy. Again, gold. I'm watching this 2350 level as well. So I like gold at 2350. If we get a bit more push there, we'll watch on that front. Take a quick look at some of the sectors here this morning. Look at this. Semi's down 6.5%. The regional banking ETF down 5%. Consumer discretionary down 4.7%. IGV, this is software, down 3.4%. XLK Technologies down almost 6%. I mean, you're getting some chaos in this market right now. What a wild day. Also, guys, we're going to be doing a lot of analysis. This will be a very busy week for us. If you'd like to stay up to date on everything, make sure to join our Telegram channel. There's 1,000 people watching between Twitter and YouTube right now. Hello to everybody. Hope you're doing well. Hope you're trading safe in this environment. I know it is kind of a crazy environment, but just stay true to the strategies. Stay true to your risk management. These are the times, I will say, guys, these are the times where risk management absolutely saves traders or ruins them. If you are risking improperly and you're getting absolutely pummeled in a market like this, again, risk management, risk management. We're going to drop the link to the Telegram if you guys would like to join it. It is free to join. We're going to be sharing ideas and analysis throughout the week there. This is a crazy, crazy week with the VIX so high. It is likely expected to continue to be volatile for the rest of this week, if not longer. We'll see. Oil is down 2.3%, guys, down to its lows of June. And, inflation this is telling you that inflation is no longer the problem. Inflation is coming down. Prices are coming, maybe not down, but they're going to stop rising so fast. That's no longer the problem. The problem, guys, is solidly the labor market. On Friday, we had terrible jobs numbers. We've discussed this a lot on the stream. 114,000 jobs added compared to the 176,000 that were expected. The lowest jobs print in over 2 years. Crazy. So the jobs data coming in so light is really telling you a creepy story. It's telling you, we might have broken something. The Fed might have waited too long to do something with the interest rates. But again, we will see. We got the NASDAQ down 4.3%, S&P down 3.5%. Very crazy stuff. I'm watching gold. I mentioned this just a moment ago. I'm looking to see if we do take out the lows of the day, I might be looking to re-enter my idea on that. Let's take a look at Bitcoin, down 12%. Oh my goodness. Crypto traders are not having a good day. This persistent lower high on the weekly chart seems to be taking its toll. Look at this. Support just not holding. Lower lows, lower highs on Bitcoin's weekly chart. That is a bit of a risk-off sentiment gauge by itself. When investors are buying Bitcoin aggressively, it's usually telling you the markets are optimistic to a degree, that there's a bit of a Goldilocks environment. But when they're selling Bitcoin like this, get out of the way. Be careful, because that would tell you that market sentiment is very bad. NASDAQ now only down 4%. We've come back a little bit here. Perhaps a little bit of buying the dip on the opening bell here. Stock market in the U.S. just opened up, like I said, just about 8 minutes ago. A little bit of an initial push. We'll see if it has some legs, but I'd be very careful watching this market today, because again, that is some serious selling pressure. And if we go take a look at what happened in the Japanese stock market when it opened up, I believe it had a little bit of a bounce back too. Yep. So you had some bounces and then follow through to the downside, bounces, follow through to the downside. But we'll see. Again, what a crazy, crazy day. If you're somebody looking to invest in stocks and have been waiting on the sidelines, like myself, this is great, because now we might actually be able to see some serious discounts on, some of the longer term stocks that might be out there. But again, I'd be careful, because we don't know where the bottom is right now. 10-year yield dropping off a cliff, 20-year yield dropping as well. Here's the 30-year yield. Very crazy. I was up when the Tokyo stock market opened. Yeah, it was crazy. Absolutely crazy. Again, the labor data coming in very weak is concerning for stock market investors, because again, this shows now that we've got inflation coming down, that's great. But if inflation is coming down, but then you at the same time start to have one problem swap out for the other, unemployment rate rising, this is the concerning thing. The market was hoping for this scenario, inflation to come down and unemployment rate to stay kind of flat, right? That's what the market was hoping for. And now what's scary is that you're actually getting this scenario. And that's signaling to a lot of investors that there is a possibility, an increased possibility, that we could enter into a global recession. And a global recession, as you would imagine, is not good for stocks, right? Company earnings could get hit. And that is why when we go take a look at some of the, individual names out there today, oh my goodness, you got everything down. If we go down from peak to trough, look at Nvidia, guys. Nvidia down 9% on the day. Palantir down 8%, another big retail name. Tesla down 7%. Amazon down 5.5%. First Solar, Upwork, Apple, Uber. My goodness. Look at Apple, by the way. Apple trying to rip back higher on the open here. PayPal down 4.5% on the day. Google down 3.8%. Microsoft down 4% today. Airbnb, Nike taking out the lows. Crazy stuff here today. Again, some days the story just writes itself for stuff to cover. As part of my job, today is made easy. NASDAQ, again, took out support. If you're looking at the NAS, we really took out our support level here. And this, depending on how the candle closes today, is a big signal, positive or negative. If you get a strong wick and we actually close positive for the day, that could be a very bullish signal. But if you can't close, if you close with a big red candle like this, or perhaps you even take out those lows, look out below. That could be scary. But oh my goodness, guys, it is an absolutely crazy day today. But again, I mentioned this earlier, but for people who are just tuning in, one thing that could possibly happen is if you see these charts continue to roll over, if you see more blood in the streets, it is possible that we do see a bit of a surprise from the Fed. Okay. I'm not saying I think that's what's going to happen. I'm saying that I think it is possible. It is possible that we could see an emergency cut from Jerome Powell. News in 4 minutes. Yeah, we've got let's make sure we got the news pulled up. Final services PMI comes out in 2.5 minutes. And guys, all eyes are going to be on this services PMI here this morning as well. ISM services PMI forecasted to be 51.1. Bulls, let's just hope, right? 51.1 doesn't disappoint, because last week so this is services, the services component of the economy is the index is being reported in just about 20 minutes. Okay, 10 a.m. That's going to be huge for the market. But on Thursday, we had manufacturing, and manufacturing disappointed, and the market hated it. I'll tell you right now that the stock market as a whole absolutely does not want to see bad economic data. For a little while there, the market was okay with bad data because it meant, hey, they're going to cut rates, and that's great news. But now that the market has gotten what it wished for, it's scary, because now that the market has been, yes, bad news is good news because then they're going to rate cut. Suddenly, they got what they wanted, and that wasn't what they actually wanted, right? Because now bad news in the economy side is just straight up bad news for the stock market too, because people get fearful that, oh my gosh, we're going to enter into a recession and all that sort of thing. So take a look at the 15-minute chart here on the NASDAQ. Let's see how this candle forms. Here's your 15-minute chart. The S&P 500, same thing, trying to find a bottom on the opening hour. But again, so much carnage over the last 24 hours. There is a ton of fear in this market, guys. But you can see, look at this. The VIX is coming down. Perhaps that VIX is a little bit overbought and maybe starting to roll over a little bit. We'll see. I'll say this. I do like the NASDAQ. If we can hit 17,100, somewhere around that range, I might look to take another attempt on the long side. I've taken several already and been so dead wrong, guys. I've been so dead wrong in the NASDAQ. Trying to catch buys on this one. But again, bit of a surprise over the weekend with the reaction over in Japan, right? Big Japanese, they hiked rates, and that spooked the market. And suddenly the rush for the yen, bit of a carry trade unwind. My opinion is that even though I am bullish overall on the stock market, right? I think that there are some deals that may come into this picture. I am also fully aware that I might be too early, as I have been before, right? I've been early here, early here. So if I'm early again, I'm fine with it, because lower prices on the NASDAQ for me, as a longer term bull, I'm really happy to potentially get some of those better entries, especially if I can buy some stuff for the longer term that I really like. So we'll see. But my goodness, guys, what a crazy day. NASDAQ down 3.8%, S&P down 3.11%. A little bit of a comeback for tech specifically, I'm noticing, guys. Technology probably doing better on the sector front today. Not still down probably the most, but bouncing back on the open. Technology is probably doing okay. Let's take a look at some of the better performance today. It's exactly what you would expect. Consumer staples doing okay. XLU, which is utilities, healthcare is doing okay today. Real estate's actually doing okay. This is probably because rate cuts are like imminent now. But then you look at some of the worst performers. You got the regional banks, terrible, terrible day. Semiconductors, awful day. XLK, technology, not a good day. Consumer discretionary getting beat up. Software companies getting beat up. XLC, this is comm services, kind of all the higher risk stuff really taking a beating today. Again, NASDAQ down only 3.58%. Sounds crazy to say that, since that is still a massive down day. Gold is trying to bounce here. Again, just no shortage of volatility this morning, that is for sure. We got 1,300 people watching this live stream. If you're enjoying the show, do me a big favor, hit the thumbs up button. We just had this number come out lighter than expected, the final services PMI. Again, the big report will be the ISM services PMI that comes out here in just 15 minutes or so. We'll see what the market does in reaction to that. Yes, please note that news is not for 15 minutes. You do have this number that came out, the final services PMI, but this red folder event, the ISM services PMI, is kind of considered the main news data point here this morning out of the US. Bit of a bounce back for stocks so far here. Still down 3% on the day, 3.5% for the NASDAQ. Dow Jones down 2.4%. And look at the Russell, guys. What a poor Russell, man. The Russell was doing so good. It was finally seeing a breakout. And here I come, I try and buy this thing, and boom, just rolled over on me. But I am glad I'm out of that one, because my goodness, it kept going. Russell getting absolutely destroyed here today, off the idea that we may see a really, truly slowing economy in the US. And that fear hurts the Russell story quite a bit. Again, the concerning thing here, though, is you're seeing a bounce in the NASDAQ. You're seeing a bounce in the S&P 500. But let's watch very carefully to see how stocks close today. Because, again, if you get something where, you get this rollover back towards the lows, that could lead to just more carnage. But if it closes strong today, maybe the market is sniffing out, oh, the Fed's going to do something, and it could actually be a buy the dip opportunity. We will see. I definitely am kind of on the sidelines right now, just watching how things go. But with that big of a slide here, wow, really crazy. Lockheed Martin, someone mentioned Lockheed. Let's pull it up. Lockheed's down 3%. It's been doing very well overall, simply because, again, kind of war concerns. Here's gold down 2% now. Silver a whopping 5%, and oh my goodness, no shortage of carnage there for the metals market. Metals are holding up a lot better, though, than the S&P 500, the NASDAQ, and the Dow. Metals are doing their thing. Here's oil down 1.75%. So very, very interesting to see that today. Again, probabilities now very solidly rooted in rate cuts for September. And big ones at that, right? You're talking about a possibility for a 75 basis point cut in September now, priced into the market. And that is something worth mentioning. I mean, as worth mentioning, look at that 2-year yield down 2.3% today alone. The 10-year yield's down 1.7%. And you might have to start asking, well, Nick, is this the time where the yield inversion becomes uninverted? Let me actually go look. We can look at that. My computer is red hot this morning, so it might take a second to load. I can hear it chugging along. So this is the 10-year minus the 3-month note yield. And I don't think it's fully updated yet, but we will see what happens here, because again, what you're seeing right now on yields are yields 2.39%. The shorter duration stuff is getting bought aggressively, and longer duration is interesting. Interesting stuff. Yeah. Yield's going crazy. We'll see where that lands today. 3.3% now for the NASDAQ. What a wild day. Also, guys, if you want to use the software that I'm pulling up on the stream, we're going to do something real quick. We're going to drop the link to apply for a trial. If you guys want to try out to the Edge Finder, which is our software that we're using each stream to take a look at markets and, more importantly, market data, which has never been more important to look at, by the way. This is a great time to be looking at market data and trying to understand what is really happening in the global economy. So if you don't have access to the Edge Finder, we're dropping a link to sign up for a trial. You can get 30 days access to the Edge Finder using this link being dropped in the chat right now. Don't miss out on that. Again, you can fill that application out and someone from our team will set you up with a copy for 30 days access. Chandler or James, if one of you guys could drop that. Perfect. There it is. Boom. Try out the Edge Finder. Click that link, apply for a trial, and you can get access to the Edge Finder and see if it's the right tool for you. Again, access includes everything from our COT data, which we should definitely look at, our data scanners, all of the economic data like labor statistics, economic data, interest rate data, so much more. Don't miss out. Take advantage. Link is in the chat right now. Okay, we're going to take a quick break, guys, and we're going to come back with Ivan, who has joined us to go over what is happening in this crazy market across the world. Everything is moving crazy. Stay tuned. We'll be right back with Ivan. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, guys, and we are back with Ivan. We got 1,300 people hanging out with us, Ivan. Say hello to everybody.
Hello.
Ivan, has it finally made its way into the picture? Are we seeing the carry trade unwind with the yen? Look at the yen strength today. Oh, my goodness. What are your thoughts on this?
I have a black t-shirt on today. I tried at least. It's a Black Monday. And I didn't foresee it.
Like it, yeah.
I didn't see it coming. Like, I never see things happening, but this one is a funny one. So I guess it's a turmoil of a lot of things, which one was the hideous NFP number on Friday. Ultra low, like we've not seen that in a long time. Mm-hmm. And inflation already ish around. So, labor market has been strong for so long time. So was it the last line of defense that the market had to say, okay, we actually have something going on and now we don't have anything anymore?
Yeah, I mean, that's the question. I mean, the sell-off in just everything. I mean, everything is selling off, even gold and silver, oil, stocks, gold, silver, Bitcoin, Ethereum, name anything except for the yen, Swiss franc, and TLT. And, it's likely down today. So very interesting, to say the least. Is there any chance that we bottom out around this 141, 142 range for the dollar yen?
100%. Or not. The thing
100% that there is a chance.
Yes, there's a chance.
Yeah, right.
Now, remember, people, what generally has to happen is that we have to find a bottom somewhere. This isn't going to be forever. And I try to go back to 2020. Yeah, there's 2020. Like, this felt like forever. Every single day was a new bottom.
Yep.
Bottom. We fell from top to bottom 36%. Today, I think so far, okay, I checked previously, was like 10% maybe. We have fallen from the peak.
Yep.
To me, this is just a normal correction. Like, what's
Yeah.
the matter, people? Why are you crying about? You know. So yeah.
Yeah, first 10% move, Ivan, in over a year. I mean, actually, I was looking at seasonally what's happened. I want to show my screen just for a second, Chandler and James, if you don't mind. Check this out. On the S&P 500, we made this similar move about a year ago, and you can actually see how that played out. So this is literally August 1st, 2023. We saw a sell event that took longer than this one, but ended up going around 10% down. And that ended up being a wonderful buying opportunity for the market to continue to rip higher. So is this one big buying opportunity? We will see. But what does concern me is the velocity at which we are selling. In the last year, we saw 10% down in like 3 months. This time we see 10% down in 20 days.
Yeah. Does it matter? Does velocity matter all of a sudden? It does. It I kind of love it. I like it. I'm glad I didn't buy 1st of August at the high. Second of all, okay, so let me take you through what does it mean, where is this coming from. So where we have seen some tech layoffs, we have seen some miss on earnings. We have seen for quite some time the slowdown in the US economy, but it's the last one to slow down, or maybe the second last one to slow down. Still hasn't done it. And then we have had strong NFP, we have had strong unemployment, we have had strong inflation for quite a while. Now we have massive layoffs, or massive as they call it, massive layoffs and a slowing economy. It might be the perfect storm. But people, this isn't 1930s. If this one crashes 20% tomorrow, there's checkpoints, there is rules and regulations in place. If the stock market now goes to circuit breakers, it's 7.5 in a day or something. Doesn't really matter, because in the end, what was COVID, everything shut down. It was a buying opportunity. So,
yeah. Well, there's also something. Here's some ammunition for the bulls right now. Some ammunition for the bulls are, let's think about where interest rates currently are at, 5 to 5.5%. Think about this, Ivan. The Fed has a lot of ammunition, a lot of room if they need to bring those rates down. That's a very historically, or in recent history, that's a high base federal funds rate, which now is, with hindsight in our favor, looks very restrictive. And the Fed is likely to cut those, and that gives them ammunition to try to support the economy. They have room to cut. They have more room to cut here than they did in COVID, right? So if we think about that, they have plenty of room. The drawback that you could point to is that the economy is probably much weaker right now than it was going into the pandemic, right? But going into the pandemic, we had, people had a lot more money in their pockets. Nowadays, inflation has really hurt people. So, it's a bit of a give and take. But again, the Fed has a lot of ammo to try and defend this sell-off, right?
Yes. Back in COVID, before we started, it was 275, if I don't remember correctly. If I don't remember wrong. And secondly, when we were buying bonds at record high and we put interest rate to zero or almost, there was no more interest rates to go lower. Like, that was the bottom. They didn't want to go beyond negatives. So in that sense, we have 5%. And what generally is like a line of a lot of things is 2.5, 2.5, 2.5. 2.5 inflation, 2.5 interest rate, 2.5 inflation, 2.5 in growth is kind of what they want to be at. So 5 is.
Ivan, I don't mean to cut you off, but we're about to have services PMI. So let me just do our breaking news really quick. Sorry about that. All right, and services PMI should be dropping here. 51.4 coming in line with expectations. Not particularly exciting, but also positive. So NAS 100 up just a little bit. US 30, SPX up a little bit here. GBP, Euro, a little flat. Dollar index just slightly positive on this. Gold, a little bit of a mixed reaction here. And WTI seeing a little bit of support. So maybe a little bit of something for the bulls to chew on today. But anyways, didn't mean to cut you off on that, Ivan. What are your, keep going with your thoughts. Sorry about that.
Have you ever tried to cut off a man before?
Wait, say that again. Sorry.
Have you ever tried to cut off a man before?
I never have, but we have you on the soundboard, Ivan. Check this out.
Ivan helped me see the light.
I love it.
Yeah, nah, I lost my train of thought. What were we talking about again? Like a little less serious note. If you cut me off, I forget what I said. But I can give you 2 cents on the services. Nah, okay, it's all right. It's okay.
Yeah,
it's all right.
Not going to necessarily save the day, but definitely not hurting the story. I mean, a little bit of stronger than expected, even if it's just slight. Services PMI, maybe a little bit of stronghold. But here's the thing: the Purchasing Managers Index, which shows the forward-looking kind of outlook of people making purchasing decisions in the services part of the economy. It might be different the next time around, right? With all this, bearishness, all this fear coming into the marketplace, we might see a little bit of a different sentiment going next time around, but we'll see. PMI numbers slightly better than expected today. Stock market has paired apart a lot of its losses here so far. It was down at one point much more than this, but Dow Jones down 1.75, NASDAQ's down 2.3, S&P down 2. Very interesting. Look at this reaction to the S&P at this 5240 level. Very interesting.
Can we talk about the divergence in dollars? Like Aussie dropped like a million things, and then Euro came back up, 200 pips down or something, and Euro just flew higher. Dollar CAD is lower for that matter on the dollar weakness, and dollar fell. But why the Australian dollar fall so much while Euro was going higher and New Zealand going lower? Like, what is going on?
Yeah, really interesting. The Euro being up today, what do you think that's all about?
I think that, to be honest with you, to answer my own questions, it's where it's safest at the moment. Because the unwind of the Japanese, that also goes into unwinding of some CHF. That also goes into, dollar is the main center, so we don't want to go to dollar. So where on earth are we going then? And for Australia and for New Zealand, they are in that side of the world where nothing goes well at the moment. So the reason why they would fall is because they are highly sensitive to risk sentiment. So that's my small conclusion.
Yeah. Very, very curious to see that, because you're seeing, across the board, the dollar index is much lower today, down 0.65%. Let's talk about the dollar index for a second. Look at this, guys. We took out the 104 level, and we've talked about this for a while. This 104 level being kind of the gatekeeper to much lower prices. And as soon as that level broke, man, that NFP jobs data, some follow through here today. A little bit of concern about, the U.S. economy. Ivan, you and I have talked about for probably a year and a half how, the U.S. economy's outperformance makes it look so strong, the dollar. But now there's some serious questions. We're realizing that, the U.S. economy is certainly not immune to global slowdown. It's certainly not immune to, the yen getting bought aggressively from fear from investors. It's interesting to see. And, if you look at the very long-term averages of stocks in other places, not just the US, or you look at other currencies, the dollar is not always just this pinnacle, strongest thing. It has been in the last few decades as kind of the safe haven of the world. But again, that can always be challenged, especially in times like this, where you get big fear events. We'll see where this drops. But I don't know, Ivan, let me ask you this. So I'll say this. I am a buyer of this dip overall. I like the idea of, I don't think that the world's going to go into a horrible recession. I think that this fear is a little overdone. I'm putting myself out there. I've been wrong already several times on camera. Let me ask you,
Mhm.
with the yen, with the wherever you want to go with this, where do you lean? Are
Mhm.
you more risk on buying this dip, or are you more on the sidelines, or are you more risk off?
I think this is an overreaction here.
Hmm.
Because inflation is still 3%. Growth is what? What the growth is at the
GDP was
moment?
2.8 compared to expected 2. So, yeah.
It's not too bad.
Yeah.
If negative, if growth was negative, two quarters over quarters, and inflation was negative,
Yeah.
the unemployment rate was 10. Yes, then you can say this. But what is this market? It's 10% down. What is that? That in my head is a normal thing to do. It's just that it happens a bit quickly. Okay, so what are we doing? We are setting in for the U.S. election. Okay, what do you do then? You kind of take some profits and you gotta get your things going. What is going to happen? Court money if you want to, but after the election and the spring is going to be probably the best season in a long time.
Yeah. I tend to agree. I mean, if you look at, you've got it pulled up, some fear indicators. People are very, very scared. You can also look at the VIX, which is still up 73%, even though it's come down a lot from where it was. You got the VIX up 73% in a singular day. You got oil down 1.5%. You got silver down almost 5% today. There is no shortage of fear. I personally agree. I think it's a little bit overdone. I think that there's probably some dip buying opportunities. But let me be clear to our listeners, when Ivan and I are saying that, we are not saying, oh, this is certainly oversold and it is going to go right back up. For newer listeners who may not have experienced this sort of volatility before, I want to just say, Ivan and I have done this for some time. We also are very aware that we could be
We traded
dead
COVID.
wrong. What'd you say, Ivan?
We traded the COVID.
Yes. COVID, guys, for new traders out there, was crazy. That was some serious volatility. You want to take a look at a VIX that's high? Here's 2020. The VIX went up to 85. So when you're talking about volatility, we are in a higher volatility environment than we have been for some period of time here. But please understand, Ivan and I are not saying, oh, it's certainly going to go right back up and everything is good. But when we lean one way, we take small calculated bets in that idea. And if we're wrong, we lose small. And if we're right, we try and win decent. Is that fair to say, Ivan?
I would say that a bit different. I would say yes. We think the stock market's going to go back up again because the underlying factors isn't changed dramatically as this fall would indicate. We've also had a fantastic 2024. I don't know what the year to date was at the peak. What was it, 20% or something?
Yeah.
There has to be a correction. It hasn't come, and it came today. It came with Bank of Japan increasing the interest rate. The Japanese stocks have fallen dramatically. Okay, cool, fair enough. Then what are we gonna do then? We're just gonna do what we're always gonna do. And then is this a Kamala crash? Is this a stock? Is this a U.S. election crash? No, it isn't. What is it? It is basically people taking profit at the peak because they're expecting it to go lower so they can buy again later. That's all that I see. I see panic, but I don't see me as a professional. Well, not professional, but my private opinion is it's just a normal day at the office. Get used to it.
Yeah.
People say don't trade today. Okay, fine, whatever. But what else gonna do? Like if you leave the market now, see how the market moves when it's volatile, get to know it. Because me, I'm not bothered at all. Like I don't have any
Yeah.
emotions about it.
Well, a lot of people, Ivan, right now are obviously scared. They're experiencing big drawdowns, problems in their account. But I got to give you a hard. I want to carry on with what Ivan was saying. If you are listening and you were like, "I'm devastated. This is crazy for me. I've never experienced this. I don't like this anymore." Let me be very, very honest with you. If you can't handle the heat, stay out of the kitchen. The old expression is so true in the markets. If you don't want to take risk, if you don't want to feel the swings in your account, the stock market, the Forex market, the futures market, absolutely not the place for you. Stay in savings accounts and stay risk-free. But because this is not abnormal, this is normal stuff for markets. As much as it doesn't feel like it, a VIX at 41 is somewhat normal if you look at the long-term historical average. I mean, it is above the historical average. If we were to plot, let's take a look at the VIX really quick, just an experiment, and putting a moving average on here, and let's do a 200-day moving average on the VIX, and let's just see where that lands us. You can see we are well above the historical average of the last 200 days. But if we go back over here, the VIX was, an average was like a 20s to 30 range. So, a VIX at 42 is high, but it's not incredibly, insanely never been here before high. I mean, 43 over here, 40, 37, 43. So when I say the VIX, if you don't know what that is, it is the volatility index. It takes a look at the options market and, looks at volumes for puts and calls and basically calculates how much the market thinks it's going to move going forward. And so it is high, and it was much higher even earlier today, but it's not untold territory. This is just, Ivan, tell us a little bit. I've been trying to explain this, but maybe you'll explain it better than me. If you've been trading in the last 2 years and you've just had this easy, slow upward market, is that normal? And if not, elaborate on it. What should people be thinking if they're like, I've never seen the markets move like this?
There is many sayings. There is many theories about the market. There is, as I would call them, there's like a linear regression. So like you go up in a certain channel, you go up and down, but generally go up. Yes, we are set for market to go higher by any chance, by any means, taxation, government, business, everything is set to grow at a certain speed. Now, most of the move higher is by 7 of the biggest companies. Generally, the stock market hasn't moved at all for the rest of them. So it's very few that has done most of the lead work. Now, in this case, for 2024, we haven't had a serious pullback. Maybe we can say there was one in April, but generally speaking, we have risen way much more than you would imagine that would be normal. Because yes, overall, we are moving, but there was a correction in 2022 when we are increasing interest rates. But to me, if this gives you heat, I can see people saying, "Oh, Japan Nikkei is down 10% today or something." Like, okay, feel it, see how it makes you feel. Don't do any trading, for God, don't do it. But do see what it does to you. Record yourself, record your emotions, record how it makes you behave. See what the reaction is, because where fear is, in my opinion, for the market is where the opportunity is. I'm not going to tell anyone to buy anything whatsoever today, but if you are making this if this makes you stay away from the market, if this makes you feel like you're burning your hands, if you have burned your hands, you always have to be prepared for the next opportunity, given your strategy, given your context of how you trade. Don't let this push you any further than any other day in the market.
Yeah, exactly. That's well put. And I think that if this is, someone asked me in the chat this morning, Ivan, inside of our Discord channel, they said, what should if I'm feeling like I'm just not mentally good to trade right now, if this is putting a big toll on me, should I trade? And, I said, you know what? You have to take a good look. First of all, you and I, we're not financial advisors. We're not taking a look at your individual perspective and telling you what you should do with your account. This is YouTube. We're sharing our opinions as always. But let me tell you this. If you feel similar to that, you probably should not be making decisions when you are not in a good state of mind, right? Yes, this volatility is exciting and scary for some, or great for others, but don't let this make you make bad decisions. And if you're making a lot of money today, or you've been making a lot of money in the last few weeks, don't let it get to your head. Because a lot of people will say, short the market, it's easy money, it's only going to go down. And you might be right. But if you believe in easy money in the markets, it won't be long before you're the easy money being given to the markets, right? Because when it comes to easy money, ain't no such thing in the markets. The markets are difficult to try and get right. And although it may look like easy money to the downside, it is possible that this thing snaps higher and starts trending up again in which case shorts would get crushed. So if you're on the right side, be conservative. If you're on the wrong side, be patient. And again, don't let moves like these completely, terrify you, wash you out, make you change your strategy. You got to have a level head in this stuff, especially during times like this.
I would argue that today is your true colors coming through as a trader. Does it make you change?
Yeah.
And if it doesn't make you change, why does it make you change? Because why isn't your strategy as deep as you might say? Also, gold to me would have been higher today. It didn't go higher. So my theory of gold going higher on a dollar bearish day, on a risk event day, why wouldn't gold go higher? I have no answer to that. And I don't need to give you an answer to that, because today is not the day to trade. Today is a cumulative of all the other days that has led up to today. We didn't get inflation today. We didn't get NFP today. We didn't get employment rate. We didn't get interest rate. We didn't get Japan. All of this has been accumulating over days, over weeks. So your plan today stays for today, but you have to plan for the future, hopefully. And what has happened today has already happened. So there's nothing you can do about it, hopefully, at least. So going forward I feel like there's a lot of emotions, and I become a bit like, why? What does it make you feel? Have I lost my emotions somewhere along the trail? Maybe not. But what I kind of would do to this is, when will market come back to normal kind of trading? If you go to yen pairs, for that matter, it is this small move here is now 300 pips. If you try to take a normal trade with normal stop loss, that is like 6 times your normal lot size, stop loss. Sorry, that looks like a 50 pip one, but it's actually 300. Is that a market you want to be in? Is that in your calendar? Is that in your books? Because what I want you generally to trade is somewhere around like 80% of your trade should be like, sorry, how do I explain it? What you're doing, it should be around 80% of the market move. So you're not trying to catch the bottom, you're trying to catch a peak, but you're somewhere in the middle. And this is in nowhere in my books, or what I normally do as a trader. I don't trade. This is way outside my normal trading kind of conditions.
Yeah.
So
there's nothing wrong with waiting for the dust to settle to make up, your mind when you have a more clear idea of not necessarily what's going to happen, but maybe just waiting for the market to slow down for a minute, calm down, let the dust settle a little bit. It's like a lot of times people will wait to trade after a news event, like 15 minutes, just to let the chart cool off, dust settle, and make a decision from there. There's no shortage of opportunities. There's no need to rush or be brash with your decision-making during a time like this, because again, market could be much lower by the end of the day or much higher. It's just very, very volatile. So it's moving all over the place. So yeah, Ivan, I want to thank you for coming on. We got our next guest coming on. Do you have something else to say? Last word.
This is why we say trading Forex is risky. Trading markets is risky because of these days when it just all of a sudden snaps in whatever direction it did, or whenever pairs it did, doesn't really matter. This is the days that you actually are losing your risk management for.
Yes, exactly right. These are your trial days for sure, where you earn your stripes. Ivan, thank you very much for coming on the show. We're going to let you go, but before we do, let me just drop a link here, or we had a link dropped in the chat. Guys, make sure to go subscribe to Ivan if you want more content from him. He's got his own YouTube channel. You can find him in our Discord channel. If you're in the Discord, he does one-on-one coaching. If that's something you're looking for, make sure to DM him or hit him up on socials. Ivan, thanks very much for coming on the show today, man.
Thank you a lot for having me.
All right, see you next time. All right, guys, we're going to now take just a quick break. We should be back in just about 30 seconds to a minute with Chris Pulver to take a look at the markets here today, bringing in some more takes on this wild market event that we are seeing with the stock market down heavy today, yen up a lot today, just volatility in every direction. So stay tuned. We'll be right back with Chris after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right,
Nick.
guys, we're back. What's up, Chris? Welcome back to the live stream. And
yes, sir.
What's the latest? There's no shortage of what we could talk about today. You got the yen moving, you got the stocks moving, gold moving, everything is flying around. What are you watching most today?
Well, watching everything. So this all kind of started. I have a Sunday webinar that I do with some friends, and I started taking a note of the futures market last night. And so I was a light sleeper just to see, like, okay, let's see what happens. I mean, we got a sample of like things are a little overreactive on Friday, right? Like, I mean, we were noticing some pretty critical levels. I just think what's funny is this is the technical stuff that I talked about, but how it happens is just so violent to the downside. And so, like I said, I saw that we gapped lower coming into Sunday's futures market. We started pushing lower, red on the night, and I'm like, this is going to be a rough Monday open. Yeah. Like I said, I was a light sleeper. I was just monitoring things, watching things, and look, man, like it's not great. I mean, looking at the bid-ask prices are all over the place. If you're in the futures market, things are pretty darn wide right now. But I just finished up a live session. As happy I was coming on with you guys today for this reason. Look, it can always be different, right? But is this 2020? Is this a pandemic? Is this 2008 with a global financial crisis? I don't think that it is. But man, it's amazing how this market will treat it like it could be or might be. And it's just crazy risk off that we're seeing, in the last, I mean, we've only been open for 40 minutes as far as stock trading, but futures market last night at 6 p.m. we're showing this the entire time.
Yeah, and you got to think about this too, Chris. Here's something to I was just mentioning to Ivan. If we switch over to my screen for just a second, I want to look at this time last year. This is true to seasonality right now. We are seeing this thing roll over right in line with what happened last year at this time.
Yep.
But there's a difference, and the difference is the trajectory at which case this current pullback is happening. So last year we saw about a 10% correction between the months of August 1st right into the end of October. So we saw about 11% dip in the market. That ended up being a really good buy the dip opportunity before it went much, much higher. But it took 90 days for the market to move 11% down. I mean, hindsight 2020, but my goodness, a 10%, 11% correction over 90 days sounds a lot less threatening than, I got to admit, what we're seeing here today, which is that same magnitude of a move on the S&P 500 happening in just 20 days. So a couple weeks. So my question to Ivan, and now my question to you is, does this magnitude matter? Does the speed, the trajectory, the volatility increase that we see this time around on this pullback, does this feel different than it did in April? Does it feel different than it felt last year around this time, where we are seeing, normal percentage pullbacks, but the speed at which this thing is pulling back is a little bit concerning. It might have more room to the downside. And I am coming from a bull, so I am bullish on this market. But what do you think?
Yeah, I think the speed is definitely concerning, because what it creates is, what you're looking at in your accounts and what you're discovering, in your trading right now, is that liquidity isn't necessarily there like we're used to it being. The bid, the ask is wide. This makes you can't settle for bad prices. I know that right now. Here's an example. I put on trades. I put over 40 trades on last night, pending, and wondering if I got filled on anything this morning. Nick, I've been filled on nothing this morning. And let me explain what my positions were. So I looked at, so just an easy chart here. Let me go to the SPY. Okay, let's go to the SPY. So I know my chart's a little messy here. Let me go to the daily. All right. So some of our very common, moving averages would be your 50, 100, and 200, right? Very common. I looked at trying to get filled right around the 200 moving average. I looked to get filled right around the 144 moving average. And I thought, well, if we've got a big gap from Thursday to Friday, and then another big gap from Friday to Monday, if this market stabilizes in here and is willing over the next maybe 30 to 45 to 60 days to do some gap fills or use the 200 EMA as a support level,
Yeah.
I'm just trying to get filled. And, and I get it. Like I'm looking for something like, let me give you a trade example. I've got a SPY here. So let me find that in my broker platform. SPY. I'm getting like, if I can get like 40 cents on the dollar. So for example, on the SPY, I did a 525, okay, 525 by 524, which is now, $8 or $9 in the money. And I can't even get 45 cents for that credit spread. I have $1 risk and I can't even get 45 cents for something that's almost $10 in the money. So
Wow.
that sucks. That sucks. So I mean, I get it. Like maybe what I want is I'm not getting the fills that I want, but I'm not going to settle for like a market price. I mean, right now that 45-cent credit that I've got pending is trading for, 36 cents. So yeah, I get it. I know it's messy, but I see it. You don't. I'm just telling you, this is what I wanted to see. So I've got a 50, a 100, a 144, and a 200. And you and I pointed this out last week. I mean, if all we're doing is coming into these zones, you got to wonder if the buy opportunity is there. The NASDAQ, on the other hand, has broken through the 200. But broken through and closing below it and doing more damage below it is very different than actually just testing it as the first time we've seen it tested since October 2023.
Sure.
So,
And I've got the you've got the EMAs. I've got the regular SMA on my
okay.
Q's 200-day moving average. You can see we're just shy above
Right
it on
there.
the SMA, but as you pointed out, just around it on the EMA. So, maybe but this is something we always, kind of point out. These are zones, these are ideas, these are not pinpoint, perfect indicators to hold a moving average. People use different moving averages. They use different, it's a feel. And I think that if you are a bull on this market, Chris, I got to say, I think if you're hitting the 200-day moving average, the classic equities buyer, spot, this level should hold. If it doesn't, if we break these 200-day moving averages, I think you got problems. I think you see more, I think this turns into, what are we looking at on the Qs? We are looking at currently about a 14% pullback in the Qs. I think if you break that, then you're suddenly looking at, maybe a 20% plus sell off in the Qs. I mean, that if you can't hold any of these support levels, I got to admit I was wrong about being bullish. But again, I'm kind of at the last line of defense here with this level support, 200-day moving average. I like it long, but I'm waiting for, what I think could be, maybe a last capitulation move this morning. If it moves lower, I may take another stab, and we'll see if I get my heart broken a fourth time. But this is I've had 3 attempts, Chris, nothing holding. But again, if this bull market's going to hold its own, you would expect the 200-day moving average to hold. If it doesn't, I got to seriously kind of pause, hit the brakes on it.
Yeah. And I again, I'll just highlight what you had mentioned earlier. It's concerning how fast it happened because right now for shedding, and it's, I know you mentioned over the last, roughly a month, right? How many trading days is this? It's been around 20 trading days, 19 to 20 trading days. Well, I think what makes me nervous is if it's going to get worse, there's no real savior until maybe the Fed rate cut in September. And I put this on my chart. Let me see if it's still on this VIX chart. I kind of wrapped up my live session today, and I wanted to reiterate this with you. I don't want to see the Fed step in and cut rates today. Or
I
this
don't
week.
either.
I think that's the worst thing that could
the
actually
same thing
happen.
to Frank this morning. I said there's a possibility they do it, but I don't want them to, because you do that. That's like when they halt a penny stock when it's trading, and it, like, let's say it gaps down, they halt it. The second that market opens back up, boom, it's much lower because the market freaks out. Yep.
So I put for, let's just talk the bad. It feels bad. It already is, but the VIX has come down, 20 plus points off the highs. really crazy, and it's just the timing is so perfect to be wrong. I'm long at 1050. I get out at 19. I make some dollars. I'm long at 20. I get out. I mean, I had VIX calls on here that I would have and I was not expecting a spike to 60. I don't think anybody was. I could see like the 20s and 30s, but not the spike up like we had last night in opening bell. I mean, by the way, opening bell today was not at 65. This was like all through the night in order to trade the VIX. And I looked at this morning. If I was going to fade this, and you can see I have it way up here, okay, I'm putting on like that worst case scenario 2008, 2020 VIX level of 80, 85. I'm going to try to get filled on a credit spread. But to me, it's still defined risk. Like I'm not doing anything like because a put on the VIX is awful. If you're trying to buy buy a put, it was I mean, when we were trading at like 50 something, if I bought a put on the VIX, it was like a $30 debit.
Yeah.
So you're essentially paying for all of it to go back to sub 20 to make any money on it. So it's a little stupid. But anyway, back to this point. Bad this week would be that the VIX continues to elevate and push up again towards these highs at 65. That's not a good thing. If we spike higher than that, obviously 80, 85 is the big level we saw back during the worst times in the financial markets.
Yep.
As far as the VIX is concerned, and obviously those weren't pretty times in the markets either. Asia contagion, right? Let's see. Japan needs to figure out what the hell it's going to do, because right now the Nikkei has dropped almost 27% since the high.
Crazy. Look at this. I'll just pull it up just because you mentioned it.
Yep.
You stay where you are on that chart. I'll show you this. You want to talk about 200-day moving average not holding? There's, as you just pointed out, the culprit today for everybody listening. Why is this? What's the root cause? Look no further than Japan. The yen skyrocketing and the Japanese stock market. We talked about being a little bit concerned about a 10% drop in the S&P 500 in 20 days. Guys, in 26 days, the Japanese stock market has lost 23%. And that's a big stock market. That's a big global stock market that just took a huge tumble on yen strength. They raised interest rates. At the same time, there was some speculation that the Bank of Japan took it as an opportunity on Friday to really, put pressure to strengthen the yen further, more intervention. You have U.S. economic data coming in light. Manufacturing PMIs last week were abysmal. And really aggressive selling. So where you're at with the VIX, as you just pointed out, high VIX, big sell-off in this chart. Take a look at the yen, down 2.3% against the dollar, or the dollar. Yen is up a lot against the dollar today. I still am holding tight to my USD CHF trade. This is the only thing working for me right now, Chris. I've got my USD CHF short position. Pretty much everything else has been no bueno. But one last point I want to throw at you, and then I'm sorry to cut you off, but I wanted to bring this point too. NASDAQ and S&P 500 are moving similarly now. Tech has held up a little bit better than I thought it would this morning. I would have expected, much, much harder selling, but it seems like S&P and NASDAQ, S&P has caught up on the sell side, it seems.
Yeah, I mean, your interesting divergence. I mean, the Russell, for all of its fun and just a moment of glory has just quickly dumped, and it's like I think the hopes and dreams of the catch-up trade, in my opinion, are flat right now. I mean, I don't think it's over necessarily, but my window of thinking we could hit this by the end of the year, that's now a pipe dream. I think that hitting 240 by the end of the year is slim to none. I think if the Russell can do anything here, it would be stabilized. That's about as good as we can get. And what I don't love is if we have, the Russell showing this structure and then ripping all the way back down here, that floor becomes a concern that we just go right back to these levels again. So again, let's talk technicals, right? S&P is down 3.25%. Qs are down 3.5%. They're moving pretty much in lockstep. The Dow is down 2.6. I mean, everything's bad. Volatility is up 150% when you and I were actually talking in Discord. It's just ugly, to say the least. It's ugly. Bitcoin and Ethereum, certainly no picnic either. Those are down 10+%. Gold hasn't made higher highs. So, the fear trade, the hedge trade, gold really hasn't benefited from it yet. But anyway, I mean, I'm looking at this as here's where I would not necessarily want to see the markets move. Like today, this is going to be another big red flag today. If we end up closing lower than the open, that's probably not a good thing.
Not at all. Not at all. We just brought the hero of the day into the stream. It's Frank. He's got puts on a day like this.
I did not know I was on.
Well, we brought you in. So sorry, I was just touting on Frank for a second. Here's everybody getting smoked today, and Frank is the hero of the day with his puts on. How are you feeling today, Frank? Let us know. Let us all be jealous.
So I did take some profit, but
Okay.
I couldn't really get filled at a price I wanted. I had these out of the money puts at 410
on the Qs.
Yeah. They opened up this morning. I got them for, I think it was like, I can't remember. It was like in the teens or 20 cents range. It opened up at around, I think it was 5. And
that's so good, dude.
I took some awesome profits, but you know, they moved so quickly, and because it was a 1 day out expiration, because I took it Friday afternoon, they changed so rapidly. I think I ended up getting out at like 2.
Sure.
So they were
like
moving way too hard.
Gain.
But
yeah, what was the percentage gain roughly, Frank? Was it actually 1,000?
It was somewhere around there. It was up to, I think it was about 3,000 at the open.
Oh my gosh. Well, congrats on that. And Frank's been on the more bearish side of this market, absolutely playing it correct. So shout out to Frank. And we're trying to figure out, Frank, let me ask you, because clearly you're the one who's most tuned in right now. Where does this market bottom out? Is there a bottoming point? Is there a bounce trade, or do you think any bounces are just further, opportunities to add to shorts?
Yeah, so I think it depends on where we close today.
Yeah,
I didn't think we were going to hit directly on the 200-day for the NAS. Well, I thought we would end up there, but I didn't know it was going to be this morning.
Right.
Me neither, that's for sure.
Right. And the fact that we've given more than half of it back, so we came down, I can't remember how much, was it like 1,000 points?
Yeah, something
somewhere
like that.
around there.
Crazy.
900 to 1,000 points. We're giving or we're pairing that loss right now, so we're above the 200-day. I think it depends on where we close. So if we get this sort of hammer candle, I think maybe price will hold up, but we'll just have to see. Like as soon as we open, there's just a buying frenzy. So this could be a level where people want to step back in. Even the way the candle is right now, I'm not really confident. It may even take a couple days, like it may hover around here, try to recover, and then we see a sell-off lower. We've come pretty far from our highs. So I don't know. I think if we do see somewhat of a big correction, then it's gonna be pretty fast. So if you're trying to trade to the downside, you're gonna have to make a decision immediately.
Yeah,
and if you're trying to buy, this could be a time to scale back in.
Yeah.
The 200-day is
Frank,
the.
I don't mean to cut you off. I think there's a little bit of delay. Sorry about that. I just wanted to mention that what you're talking about with this like speedy buyback, I will go ahead and say this. Even though I am generally speaking more bullish, the feeling of this market feels similar. And Chris, maybe you can attest to this too. 2022, there were rips in the morning that would then get sold hard into the afternoon.
Yep.
And it was like that like every single day. Do you remember that environment? And it was almost like you wanted to kind of stay long very briefly and then take your profits and get out of the way.
Yeah, it's either you get in, you get out, or you are more positioned to fade it. I mean, the best way to make money in 2022 was fading those rallies, as we had essentially a 6-month correction. Like I said, I think the thing to watch today is if we finish with a green candle about the same as where we are right now, that's a little bit more relief as far as price action goes, as opposed to, here's what I don't want to see. I don't want to see green with a large body all of a sudden become something like this, where it's green on the day, but it's just absolutely smashed right back down to the lows again. Yeah. So if we finish red, that's even worse. If we close, that's even worse. But if we can maintain this, okay, fine. I think the problem is this market is so driven by news and data that gets put in, and sometimes it's priced ahead of time. The market's usually 6 to 9 months forward thinking, but there's no data, man. Like, that's the problem. It's like, if the Fed stays quiet and they don't do something silly like an emergency cut, then it's going to be, what does Japan do overnight? And how does that affect the US market going into tomorrow? We have all these earnings reports this week. I'm not going to take, I mean, Frank knows this is one of my favorite things during earnings season is to place a bunch of trades. And like last week, I had like 6 out of 7 winners. I love doing that. But this week, I'm like, I don't care what earnings are at all, because all you're going to see is volatility.
Yeah.
And I don't know if it's going to be, the earnings might not matter at all. And it might be everything is down because the market is down and there's nowhere to hide. A good print could, temporarily push it higher, and then it messes up your downside because it's just going to fade anyway. So I'm probably going to bypass earnings for this week. I didn't see really any major notables. I like playing the Mag 7s. Those are super liquid and easy movers last week. But there's things I'll be watching. But more importantly is like, I just want to watch price. We're sitting at these critical levels on the Qs. We're nearing critical levels on the S&P. So I'll ask you guys this: would you be surprised if the S&P this week is going to test the 200?
I think so. I think testing the 200 is giving back everything from the beginning of the year, which was that AI trade.
Yep.
That was on the NAS. They've already done so, but I guess S&P and Dow might complete their moves. I don't see tremendous upside. I think we catch big bounces every now and then, but I think we're going to test lower levels.
Yeah, I think that in terms of the S&P 500, man, it breaking this level of support, depending on how today closes, is going to set the mood, I think. If we take a look at my screen just for a second, I'll show you this. So look at the S&P 500, huge level of resistance here back in March that proceeded into April, where we saw the big, slide. And then when we took out that level, we held it as support, ripped from there. But now that we've come all the way down here and already showing signs of breaking that, it's a little tough. I think that for me, as this market pulls back, I'm hesitant to try and call the bottom per se, but I'm taking stabs on the long side. I'm getting out quickly if I'm wrong. The idea that I have is overall earnings. You actually had this up on your screen, Chris. Earnings overall have been pretty good. There's been a lot of beats in the earnings reports that have been coming out. At the same time, US GDP figures massively beat. Today we had services PMI that came in better. So the tricky part about this is there's something in this for everybody. If you're a bull, you can point at stuff. If you're a bear, you can point at stuff. I do think that the bear case has substantially strengthened in the last 2 weeks, especially with the, kind of fallout event in Japan. That is massive. Like, trying to time the bottom of that is going to be hard. But I do think that overall, again, big tech earnings have overall been pretty good. The stock market's earnings overall been pretty good. But the question now is the economy able to hold up to not destroy those earnings in forward estimates? That's what's going to really, for the stock market, either hold this thing up or cause a much greater pullback. I think it's all about the Fed. Yes, it's all about, rate cuts, how soon, is the economy going to hold up? But it's about the labor statistics. It's about the economy readings way more now than it is about inflation. Inflation, I think, is a total side story now, because now we're saying, are these prices for the stock market indices justified on good forward earnings, or are they way too high and this market has more room to the downside to correct to meet those earnings? Chris, what do you think?
Well, as you were talking, the first thing I looked at was the advanced decline for today. 89% of stocks declining. 7.7% advancing. Look, it's not a pretty day, and I hate to say it, but somehow we're gonna have to remember August 5th, and you got to wonder, like, does it get worse than what we experienced from a Friday close to a Monday open? And like I said, I mean, for me, this was a futures window where from 6 p.m. last night to now, it's like I saw this all kind of happening and playing out, in real time. So I think what would be, I'll just talk, scenarios and price action for this week. I do think that the market is capable of coming back to retest lows, but if we can bounce off those lows, that would be, to me, a pretty good stability level. Look, the S&P has nearly had a 10% correction. We're just off that 10%, like, top to bottom correction. I think that, if that the market was like already made up its mind that a 10% correction is going to happen, we're almost there. And so a little bit more of a flush down, but maybe it doesn't hold. And that's like I said, just as if there's any real line of defense for the bulls to step their heels in or dig their heels in, it's going to be just at these lows or kind of right around that 10% threshold. Because from there, I mean, what we do have from a technical side is we have ridiculous gaps to fill.
Yeah.
Now, I don't know how fast they're going to fill. I don't know if this week's earnings can kind of help stabilize things. Do we have any other major data this week? I mean, from the U.S. side,
it's
we
pretty
don't have
light.
a lot, right? It's pretty light this week.
Today was like the biggest one, Chris. You had services PMI 51.4, came in slightly higher than expected. Dollar still getting killed though. Economy is expected to slow. Again, I will say I think that the economic slowdown theory is a little bit overdone. I'm not saying necessarily that we can't enter a recession, that we can't enter, but I think that the probabilities, the market getting really, really bearish, fear is hitting highs. I mean, we can see that in the VIX with a VIX spiking up to 65. I think that if you are a bull, the risk to reward gets a little bit better. And I think if you're in a bear, you're just kind of, if you're a bear, you're celebrating this move lower. And again, you played it correct overall, but I do think that, none of us would be surprised if you see a continued push down to that 200-day moving average. We all made that clear. Like that price action wise seems very natural with this trajectory. We wouldn't be surprised if we see a flush down. And I think we also would not be surprised if from there you start to get this bull market kind of digging in and trying to hold those gains that we've made this year. The probabilities, historically speaking, when you get a really strong first half, we've seen the stats on this. I'm sure many people in the audience have as well. Historically speaking, when you have a very strong first half of the year, the second half is historically outperforming the averages. So we'll see, but there may be more short-term carnage to come with big sell-off today.
Can I bring your attention to this as well? The closest thing I see in price action in 2022 would have been summer of 2022. From this little cluster we had back in early June to when we started to rip here late June. This would have been, I guess, end of May into June. We had this big summer sell-off, and that price action as far as close, gap, that's the type of velocity that we just saw in the last 3 days of trading here this last week. So from Thursday to Friday, Friday to Monday, that's the only thing I can find. And that correction was around 13.5% before the market. And look, the market bottoms and the market ripped. From there, it went up about 20%. Now, it wasn't done. We actually came back and broke the lows again. But my point is, even through the start of this correction, when the market was deleveraging tech in late 2022, early 2023, it was a fairly contained deleveraging. This is not. This is chaos when you've got crazy 3, 4, 5% gaps to the downside on major indexes, which arguably shouldn't be as related and correlated as individual stocks. But I mean, when you've got Nvidia at 3 point some trillion, or now it's less because it shed a bunch, down 35%, that's tough, man. You got one of the biggest companies in the world. It's down 35%, trading like it's way more volatile, like it's friggin' biotech or something.
Yeah, and I want to bring that up just because you talked about this. I sent you this message this morning, Chris, about Nvidia. I'm going to pull it up on my screen for a second. So Nvidia, some of you guys who are regular watchers, a lot of new people are probably in here. We got 1,800 people watching this live stream right now. So hello to everybody. Welcome to the show. Nice. Today is a nice day for interest spike. Everybody's wanting to know what's going on. So hello, welcome to everybody. So a couple weeks ago, we talked about Nvidia. All of us remember Frank and I and Chris and a lot of the other guests. We're all looking at Nvidia like, man, this thing just every single freaking day we'd open up the charts and Nvidia's up another 3% day in, day out. Yep. And Chris, Frank, you and all three of us have discussed this many times about how when this sort of stuff happens, it doesn't last forever. It's really frustrating when you're on the sidelines, but look how fast this market has changed. And I'm going to say this because this was my feeling during that time. I said, and Chris, you and I discussed, and Frank, we all talked about this. 95 on Nvidia would be such a nice place to buy the stock. I wish it would give us that pullback. The pullback is here, and I'm not going to lie, it's a little scary now that it's actually arrived. Are you guys, Frank? What do you feel the same way? Do you think Nvidia has like, are you looking at this as a dip, or are you saying I don't know if I'm touching that.
No, I don't think that I believe any of this bounce right now. I think if we were to return back to our highs, then the bubble is back. And if we really are seeing this sort of pop in the AI trade, then it's going to go further. So this morning, I don't really buy it. I'm going to have to see more. But I'm looking at VIX right now and seeing what it's doing during the day. Just crazy moves all around. I couldn't get logged into my Charles Schwab account. They wouldn't let me in. I had a VIX position on it, VIXY, as a hedge. I was up 100% this morning, could not get in. So I'm stuck in it. They said the average wait time is like 60 minutes for someone to respond to you. So,
oh my gosh, is it just because there's so many people trying to log into their account this morning that it's down, or their servers are having issues?
I mean, this happens every single time there's something like that. Like
That's
they never, it's not just Schwab, it's like every brokerage account does this. I don't know why.
That's crazy. That's wild. Yeah. Well, yeah, no, I mean, again, I think that's a very respectable position. When you look at this stuff, I think a lot of people, they are shocked by this volatility, but what is normal about this is that these are what pullbacks look like in the stock market, and they can go a lot deeper than people think they can. I mean, again, 2022, I think Frank was off to school in that year, and he wasn't paying as much attention to the markets during that time. But Chris, I know you and I remember it was like bleeding every day. Like every day, market was ugly.
Yeah, the only reason I made money in 2022 was because the first half of the year I was so heavy energy and inflation that it pretty much lifted my entire account. And then I was also trading the Japanese yen. So like the dollar, the yen pairs for currencies, FX trading, and being right the first half of the year were really the only reasons that allowed me to make any money in 2022. It felt like, an easy like January to April 2022. And then after that, it's like, just try not to lose money for the rest of the year, because there was nowhere to go. It's like bonds are down, equities are crap across the board. And it was like even. It's like you had big rips to the downside, and then it'd come all the way back up, and then rip to the downside all the way back up. It's like it was hard to get a sense of like how bad is this going to be. And honestly, like it was a very manageable and I'd say even obedient correction. That's what's not happening right now. Like this correction, even in 2022, did we see a spike up to 65 in the VIX? No. We just saw several spikes in the 30s, right? But 2022 VIX was not anywhere near what we just saw in the last 3 days of the VIX.
Yeah.
I mean, this is crazy, right? Like all the stuff that happened in 2022, all these corrections were they're right there in the 30s. Very volatile, okay? But not those outlier single day spikes, which, and this is why like today feels kind of unusually scary and uncertain, is like, it's nuts, man. But we can't say that we didn't see this coming. It's just when it happens and how it happens, that's what nobody knows, right? Like it is as good as a trader as we might think we are, or like, look, man, I've got hedges and my stuff's pretty orderly on a day-to-day fashion. In like, I'm still watching this stuff like a hawk, and maybe unnecessarily close, but it's like, I have to, it's my job, So I just think that in this type of event, when we have kind of these outlier moves, you just got to watch everything closely. And the most important thing would be, look, if you don't know what's going on, then this is what's going to give you some, you can have a stairway of mistakes that ultimately give you the wisdom as a trader. This is the type of experience. I mean, holy fudge, dude. Okay, by the way, this just card alarm's going off here. That can't be right. RKT. That's not right. Never mind. I just saw this chart alarm. See this? RKT 625 lows.
Yeah.
We're trading at 1750. So that's not right. Anyway, point is, if you want to, add some badges to your trading experience, it's days like this where you're going to remember how you either survived it or you didn't. And if you didn't survive it, you're going to learn from it if you want to keep trading. I'm all about survival, and I hate the fact that you kind of have to have these black swan events as far as preparation, because this is why they sting and linger so vividly in traders' minds, because if you can survive this, you can survive pretty much anything. But if you can't survive this, it's going to make you rework your plan so this never, ever, ever happens again. I'm just putting that out there as like a PSA for everyone trading. These aren't fun. None of this is fun. I don't care how good of a trader you are. I mean, okay, Warren Buffett sold all of his Apple stock, or, he's sitting on $300 billion in treasuries now. It's like, who cares? Did Warren Buffett, did he call the top? Not necessarily. I mean, the guy's been wrong for a decade and everyone's been giving him crap for it. And all of a sudden he looks like a genius.
Right.
There's going to be outperformers and underperformers and all this stuff. But the reality is, what are you doing to either, one, trade through this, survive it, profit from it, learn from it? At the end of the day, it's, everyone has their own experience, but what we're trying to offer is hopefully some commentary and experience where it's like, we're going through it right with you. I wish I could say I had all the answers and like, oh, look, man, we saw this coming and I'm hedged like crazy and I'm up, 100 grand in everyone's account. I'm not. Like, today is essentially, I washed a lot of profits in the last 5 days of trading where I was up on the entire year a lot, and I've given back a pretty healthy chunk that I'm not real happy with. So now it's about just, okay, what do I do from here? How do I navigate this?
Same thing for me. I mean, giving back a lot of gains on this year for sure. But the thing is, one thing here, I want somebody in the audience is going to learn from this concept that you're sharing, Chris, and what I'm about to say too is, if you feel like right now you're like, this is devastating to you, then the cold answer is that you were too leveraged, that you had too much size. But to your point, Chris, about survival in a time like this, if you're like, okay, I've been dead wrong, but my account's not destroyed by this, then you should be patting yourself on the back and saying, look, I survived drawdown effectively. And that's all you can do is trade, because nobody can see the future. Nobody knows, oh, tomorrow the Bank of Japan is going to do this, or Israel and Hamas are going to go at it, or Iran is going to do this. And nobody knows that for certain. There's just too many uncertainties in this world. So all you can control as a trader is your position sizing, and you can be modest with your approach to the markets. I've given back gains, but I'm not destroying my account by leveraging the crap out of it. So, and then you have traders like Frank, who's been on the right side of this move. He's been buying puts and making money on this move. And, you just mentioned, Frank, you're looking to scale out. Actually, let me ask you that. So with your puts that you've got, do you have anything left? And the ones that you've cashed in on, what's your kind of approach to managing all those puts that you've got?
Yeah, so the ones that were expiring today, I had to close out early because the move is so large. I have a bull put or bear put vertical on the Qs. It's at 450. I bought a call, and 430 I sold a call. So that's a 20-point move. But it's for Friday. So I got it at 581. It's trading at 1059. So I'm not really sure at this point. Like, I've taken profit, and now I'm wondering if I should just let this trade run or take the 80-something% profit that's here. I'm sure Chris would say take the profit, but with a move this big, it feels like if this continues, I could manage like the whole 20-point move by the end of the week. But
yeah, and I think that's the key here is for anybody who's listening, whether you are bullish, bearish, whether you like gold, whether you like the NASDAQ, whether you like Russell, silver, oil, whatever you are trading, the key takeaway during a time like this, I think, is just hold, have your opinions on what the market's going to do, but don't destroy yourself if you're wrong. The first question I think that, any good trader asks himself is like, if I'm just dead wrong about this, what am I going to do? Because there's no certainties in the market. So if you're like, okay, I don't know what's going to happen for sure, but I have a good educated guess, take your educated guess, but appropriately size it so that when you're like me and you've been wrong about the NASDAQ for 2 weeks straight, you're not getting destroyed by it. You're just dealing with it, and normal drawdowns are going to happen to everybody. So
the biggest problem is closing out, and that's when you're in profit. Don't get greedy. take your profit if you're, happy with it. I wouldn't say just sell out as soon as you're in profit, but if you're happy with what you've made, like this morning, I think I got very fortunate in this move. I was just hedging myself against severe moves like this, and it happened to work out today. But it usually doesn't work like that. So knowing when to close out is good, because you can see especially in options, you can see your trade go all the way back to where you bought it at, and you can lose money at the end of the day too. So closing out is important. Nick, you were in NAS and you got out of there before this huge drop too. So it's like managing wins and losses, making sure that you're not staying in something too long or too little. That's the hardest part, is closing out, because people see these tremendous gains and don't know what to do with it, and they get comfortable in this, and they want to see more and more, and then when it doesn't go their way, they don't make as much money, or they lose money, and then they quit trading or something like that. So it's
almost like it's almost like you just want to be responsible, and whatever your opinion is, be responsible with it. If you're bullish and the market's made a really good move in your favor, be responsible with that move. Maybe trail a stop. Maybe make sure your position sizing is not too big. If you're feeling incredibly good on a day, then here's a lesson I learned, Frank, recently. Oh my gosh, I made so much money on that day, and I did take a little bit off the table, but I held majority of my positions and I didn't trail stops. And hindsight 2020, but I gave back so much of that incredible day on the following sell-off that kind of occurred. So I think it's just be a responsible trader, especially in times like this. You'll thank yourself later, because when the floor falls out from beneath you and you're just wrong about stuff, you're going to be glad that you didn't over risk. Chris, anything to add on that?
To a trade, because the market is not loyal to you. It wants to take all of your money.
That's
so
it.
When you're happy and in profit, take the money.
Agree. That's why I stick to mechanical profit targets. It's like, if you're trading options, you want probabilities. Love your 15%ers, love your 25%ers. 50% are awesome. 100% are rare. 1000% are amazing. But if Frank was going to define his career by 1,000 pip wins, or I'm sorry, 1,000% wins, like, it's not the highest probability. So I mean, look, everybody should be jealous of like Frank's conviction to those trades and the way he played them, because like if he bounces off of me, I know that I wasn't real pleased with like the duration of those trades, right? You're doing a 1 day trade where what you do, Frank, you did like a Friday trade for a today expiration, correct?
Yeah.
Yeah. So I mean, like, look, I'm so happy for Frank to have profits on those, but the first thing I would have been doing this morning is taking profit just like he did. Yeah. But like I said, I mean, if your career is going to revolve around like 1,000 pip wins, or I keep saying 1,000% wins, it doesn't happen very often. And that's why I'm thinking about like even all these traders out there that, I mean, I don't know how many times have been typed in the chat today, but buy Bitcoin, buy gold. It's like, okay, cool. So gold goes up, maybe another 5%. Bitcoin, if it's down to 50K and it's been shredded for a 30-40% pullback, Ethereum's down 50%. It's like, I just PSA for the Bitcoin maximalists out there. It's all connected. If we're going to see a, giant 20, 30, 40, 50% correction in the overall markets, I'm sorry, but Bitcoin's going to be down 70, 80, 90, 99%. Yeah. Maybe it forever goes away. So it's like none of it is guaranteed ever. And I mean, so if you mechanically take trades and profits, it's like,
that's such a good point about Bitcoin, Chris, today, because again, I'm sorry, but to add to your thought process there, I'm sorry, but if you think Bitcoin is not just a call option on the NASDAQ right now in this current world we live in, you are wrong, right? Maybe in the future, maybe the correlation breaks down between the NASDAQ and Bitcoin, but right now, buying Bitcoin is a call option on the NASDAQ. That is simply it. You're going to get hit harder if the market dips, and you're going to make more money if the market rips. That's how it's been for the last few years. Take a look at all the major market sell-offs, 2022. There's Bitcoin, the rally in 23 and 24. Bitcoin's done very well. Unfortunately, Bitcoin is not the safe haven, uncorrelated bet that many traders wish that it was. If you want that, Gold has proven that over many, many years. It is moving lower today, but it's doing better and better than the other ones. And, over a long historical period of time, its correlation to the S&P 500 and the NASDAQ is pretty low, which is a very positive thing. That's why a lot of investors, a lot of traders like gold, is that it's not as susceptible to just global risk events as other things. Now, let me be clear. I just want to point this out. The game plan on gold for a recession is, and maybe Chris, you can add or correct me if I'm wrong, but I believe that usually it is, pre-recession, gold gets moving higher. People get a little bit nervous. And then on the onset of a recession, if we do get one, you do see gold dip first. Then when the money printers come on, boom, gold rips through the highs. That's how it was in 2020. It was trading higher before 2020. Then 2020 hits, gold takes a big dip and then proceeds to greatly outperform the stock market in that year. Is there anything you would add to the gold playbook for anybody who's, looking at gold right now?
I think gold it's going to do what it always does, which is maintain some type of store value. It's not like people are going out and making more gold. It's harder and harder to mine. It's harder and harder to justify. What I think is going to be interesting moving into the next year or so is I know that you guys have both traded a lot with gold miners. And I wonder if commodities in general are going to see more of like the miners catch up with the spot prices. But gold, let me just switch up to the chart here. So gold, volatile, but I still think really, really well supported at 23. It might not come back to 23, but I could still see a combination of technicals where we pull back to 2300. We maybe test this trend line at 2270 or so. If we just break all-time highs again at 2480 and rip, I think the gold bulls are going to have a really strong case to possibly hit 3000 sooner than we would hit maybe 2000. And so let me ask you guys this question before we go. Well, I guess we have time. What am I doing? But SPX, are we closer to hitting 5,000, or probability wise, are we going to hit 5,000 before we hit, at this point, I was going to say 6,000, but 5,000 or 5,500? What do you think? For right now, we're trading at 51.83 on the SPX. Are we hitting 5,000 or are we hitting 5,500 first?
Frank, you go first.
Pure thought.
I don't know.
I don't know. All right.
How am I supposed to know this?
Nobody knows. I'm just asking because we're sitting here, like when we were consolidating last week, and I look back at this chart and I'm like, man, it's pretty obvious, right? It's like we broke a trend line, we pulled back, and we rejected off that trend line. That was very similar to what we did in April. We broke the trend line, retested, and then we went lower. And what was funny is when we retested with a gap higher, just like we did here. Gap higher to retest and then fall. So that Wednesday to Thursday trickery where the market was up on a gap high Wednesday, pushed high through FOMC, Thursday gapped higher and just absolutely got smoked. That was exactly what we did back in April. Now,
there's nothing telling us now that it should go back up, except maybe that we're close to the 200-day moving average.
Agree. I think, look, all I think about for going up is, like I said, there's good and bad, right? The good this week, I'll go back to the VIX chart because that's where I summarize this. The good this week would be that the 1,100 companies we have reporting earnings, which is a decent chunk. I mean, over 7,000 companies roughly. So let's say like 7,500. We've got like 15% of earnings coming in this week. We've already seen a pretty big retreat on the VIX. And so, for a one-off VIX event, I do think that things have settled down. But there's a big difference between the VIX at 38, like it was through most of 2022, and the VIX back down below 20. Right? Above 20 is a high volatility environment. 15 to 20 is kind of the sweet spot. 15 or lower is low volatility. This is on our charts now as something we're going to remember. Like, I'm not going to remember what my P&L looked like, or I said I will remember what my P&L looked like Sunday during futures open and what markets looked like today during opening bell. I don't love it. I mean, I'm down $38,000 today. Last week I was up like 20, and then I was flat, and then I was down like 10 on Friday. And today it's 36. So like, that's a big swing to me, man. That's like $40,000-$50,000. That's a big swing.
Yeah.
So I don't like that.
That's the nature of these things. I mean, that's the for most traders, investors that are positioned more on the long side of the indices, that's how it goes. You gain slowly and then you give back a bunch. The question now is, again, to your point about where these, is this going to be a buy the dip today, or is this going to be, further downside? I really do think that when you look at the NASDAQ, S&P, these 200-day moving averages are important to this market. I mean, if we close strong above the NAS, or on the S&P 500, if we, we didn't quite hit it on the SPX, but did we hit it on SPY? Nope. We still have maybe some room to go lower on the S&P 500. But look at the NASDAQ. I mean, the NASDAQ is actually somehow on a day like today, I would have expected tech to be massively underperforming. Tech is holding in there with the rest of the market, which is, very interesting. Tech down exactly the same right now as the S&P 500. The full market index. We'll see. Again, I expect the market to be all over the place today. The VIX has given back a ton of its upside today. But, we saw this on Friday too, guys. We saw Friday huge spike up, came back down, and then look what happened the next day. So really a lot of uncertainty out there today.
Yeah. And looking at the like I said, price action this week is going to be important to watch. I mean, today's candle, if we can hold in there with some green, that's probably a good thing on the day. I wouldn't be surprised if we come back and try to retest, but I think what's going to be important this week is we don't necessarily break any lower. This is already an incredible amount of damage from 1 to 3 days of trading that if you think about opening bell, closing bell, all the action's done pre-market, post-market. I mean, yeah, we had some volatility on Friday during the day, but it's like all the damage was done Friday or Thursday to Friday with that gap. And then, of course, Friday to Sunday night's futures or today's open, like a lot of the damage was done. And Nick, when you mentioned tech performing okay, look at the Mag 7 today. I mean, Apple was down to a very attractive technical level, right around $197, and it got bought right away. And think about earnings. Mag 7 earnings weren't that freaking bad. Amazon missed on revenue, Tesla missed on revenue, but Microsoft was solid, Google was solid. I mean, even what we thought was priced to perfection, you're still getting. In fact, I did this last night. This is the type of stuff that we do when we're you're full-time trading. I actually went into one of my 401ks and I reallocated everything for a money market instrument and a large cap, which pretty much only buys the Mag 7. That's my targeted fund. I'm going like 75-25 on that for right now, because if money's going to flow into quality, this is quality to me. So the Russell small caps, trash right now. It's garbage. This is what the market was leaning on and riding on this year, was Mag 7 carrying the way. And then all of a sudden it wasn't even Mag 7. It was what? Apple, Microsoft, and Nvidia. Well, Nvidia is now questionable, right? But Apple's still quality, and their earnings just proved it last week. Amazon had a miss in revenue, but it still made a ton of money, right? Microsoft and Google were fine. So anyway, I mean, are we going back to this narrow bull market? I don't think so. I think right now, like a lot of sentiment damage has been done, a lot of technical damage has been done. But to see that the markets have ripped on this immediately isn't a huge surprise in the short term. I just wonder if it's exactly that. Is this a short term rally where this gets faded and things get way worse for wear? We don't know.
Yeah, we'll have to see. Again, market could be anywhere by the end of the day. Be very curious to see how these charts end up closing out. I'm going to step out. If you guys would like to keep going, or Chris, if you want to take over the show for a little bit, Frank, if you want to head out too, all good either ways. I'm going to take a break. I've been on the air for a little while, so leave it to you, Chris. You got it from here if you want to keep going as long as you want. I don't think we have anything else planned for the stream today. So if I'm wrong about that, the stream crew can correct me. But
okay.
I'll give it over to you, and we'll see you see you on the next one.
All right, Frank, you want to stick around for just like 10-15 minutes?
No, not really. I think I'm gonna go.
All right. I'll do this.
I'll talk to you tomorrow or Wednesday.
That's fine. I'll do this. I mean, we had some good commentary running there. I will gladly take for the next like 7 minutes if Frank's gonna bounce. 7 to 10 minutes. I'll just run through some charts, some questions, requests. Anybody want me to look at a certain thing? I'll go through that and just hold the fort down for another like maybe 10 minutes or so.
All right. So, appreciate it, Chris.
All right, sure, Frank. I'll see you soon. Congrats on the 1,000 bagger. That's awesome.
Thanks.
Cool.
Bye.
All right. So if you have any requests, my poll report here, this is usually my top down list. I've been adding to it the last couple of months, but for the most part, it's your major indexes, your S&P, your NASDAQ, your Dow, your Russell, volatility, which obviously has been the big story the last couple of trading days, the dollar, this is dollar index, oil and crude oil futures, natural gas, gold, silver, Bitcoin with its ETFs, Ethereum with an ETF, copper, and then Japan. Obviously, we've seen the deleveraging in Japan and the huge dump where all of a sudden they're back below those 34-year drawdown levels. And not sure if the BOJ has something up its sleeve, but it's weird. It's a massive move in the Japanese index. The FXY is my long Japanese yen play. The German DAX, the FTSE, China is mildly off. It's red on the day, but not too bad. And then your Mag 7s. I'm also tracking. We didn't mention this on the session just with Nick and Frank, but for a moment today, the 10-year and the 2-year came out of their inversion for the first time in like 400 and some trading days. I think something close to that. We're back inverted by about 1/10 of 1%. But we're just on that verge of this is called the steepening. I mean, if you look at our rates really quickly, if I go to the 2-year has fallen off a cliff. But if you look at the difference between yields and bonds, okay, yields were dropping like crazy, bonds have been ripping like crazy, and here we are looking at the yields coming back, and the bonds are likely going to be retreating today. So if you look at your short term, red on the day for the short term, this is 1 to 3 year, red on the day for your 7 to 10 year, and even red on the day after a good run. I'm long at 82, by the way, on this. So 82 to 98's, pretty solid to me. I just wonder if there's more of a safe haven rip in bonds, or if this is kind of done for a while. I mean, we're coming back to the same levels we saw back here in late 2023 into 2024. But anyway, all right. So let me go through and see if there's some requests. Brazil stock market. Okay, I can take a look at what's the ETF for Brazil? Is like EWZ. Does that sound right? Yeah, this is be the one thing that I would analyze. Emerging markets are going to be pretty typically correlated to the S&P, so I would be careful on this. But we're sitting at some pretty strong levels, which I don't mind. I mean, look, you got an index that's 2650. Okay, I mean, so if I'll just say this, I'm looking at the chart, being objective. I'm not in any EWZ right now, but I don't mind this trade with maybe either one, a cash secured put to start the campaign right here, or two, another level down here. So if I were just to buy shares of EWZ, I like this level and I like this level. So if we go from 2650 potentially down to the COVID lows around 21, if we revisit those levels, I would be a buyer that doesn't tie up a bunch of capital. As long as this ETF is liquid, and if I own shares, so I'm not super sensitive on trading all sorts of derivatives that could be good or bad. So there's my. In fact, I'm going to add this in as a foreign market EWZ. I don't mind Brazil as a foreign market because I have been watching this, especially when it came to like COVID. I was interested in Brazil, and we're talking about the BRICS economies, and if it's going to be an anti-dollar play or the U.S. is losing credibility, all this other stuff. So anyway, let me put it in here. Ethereum will go. That's copper. That's Japan. So below China, I'll put EWZ. So there's my Brazil. Let's see here. EuroCAD, sure. EuroCAD. Okay. EuroCAD, I've actually been looking for an opportunity to find a top and bottom, and I've been saying this for the last, 10 years, but really, I bring traders' attention to the market seasonality, and when it comes to Forex trading, August is usually a top and bottom month or a transition month. EuroCAD's had a pretty good run here from 46 up to 52 and change. Technically speaking, I could see if oil is fairly stable. I could see again, I want to see a confirmed move where if EuroCAD rolls over to the downside, I would rather be looking to short the EuroCAD for right now. So I'm looking for an opportunity to short. I probably want to see a 4-hour or 1-hour chart tip over on some indicators to show me some bearishness. Dollar Swiss, inefficiency the last 3-4 trading days, meaning we've dropped a ton. I was looking at this as a potential head and shoulders trade, which now looks like we're going to deal with some more indecision. So this is either one of the world's deepest head and shoulders ever, where we end up holding this right shoulder and somehow working our way back to this neckline, or more than likely we're facing some more issues like this. Is it going to be an equal low, or is it going to be connect the dots here? Okay. And connect the dots here, and we're about to embark on some type of worst case move where we take out some stop losses, we run some stops at these lows. But the way that this has fallen, again, the good thing about the dollar Swiss is it's not the Japanese yen. It's not behaving like, yes, it's down and we've dropped, 300 whopping pips and okay, but it's not down 1,500 pips like the Japanese yen. So, I'm personally long in the dollar Swiss for some carry trade. I know that could be unraveling here pretty quickly, but it's not behaving like the unraveling we've seen in the Japanese yen. So I could still be wrong and nurse myself a little bit of a drawdown, and I'm okay with that for right now. But what I'm watching here is if we technically hold this level, okay, and we get a bullish pattern off of that level, I think we come back into the halfway point, or this is a range, and we'd have this as support and this as resistance. But that has to hold. I will say that definitively. We have to hold this area. We have to hold this area. If we're not interested in holding these lows, which that price point is going to be around 83.50 to 8,300, and I would even say this: if we have 8,300 and a nasty spill down to 8,000, I'm still looking for a bullish pattern, but I'm just going to be patient and keep my trade size very small, or any type of add-on trades would be with bullish confirmation. Okay. All right. Dollar Swiss, we're good on that one. Thinkorswim. Yeah, so Schwab and Thinkorswim, I believe, have had problems all morning with logging in. Okay. Apple drops $1 billion in shares. Oh, are you talking about Buffett? Buffett dropped the Apple position. Do I think gold will go up? I mean, longer term, yes. Health sector. I mean, the healthcare sector has done pretty well. That'd be healthcare, right? XLV. We're creeping up here towards these all-time highs. We're giving some back. This could be setting up for an uglier topping pattern on the sector itself. But I actually did put some exposure in last week in J&J. I have a 140 and a 140 by 20 credit spread, so I'm actually willing to own some shares of Johnson & Johnson. I do think in the U.S. equity space that healthcare has a good position with companies that have pretty good balance sheets. A sector with let's say the next 3, 5, 10 years of baby boomers retiring and needing the healthcare, assisted living spaces, downsizing, whatever it is. I think healthcare costs are going to continue to rise, and this is probably a pretty good space to be in. So, look, if everything's falling, everything looks like crap. But as far as longer term and stability, I think that healthcare is a pretty good spot right now. Commodities wouldn't be a bad spot either, but it's just tricky to trade them when you're using futures. Okay. Let's see here. NWO. American dollar down, market crash. I'm barely catching up on. Okay, BlackRock Monday. There you go. I mean, this could be seen as a Black Monday. This could be a Black Monday 2.0. Okay. All right. IWM, perfect entry for a short in IWM. I mean, possible. I mean, IWM is certainly shed a lot. If there's, like I said earlier, I mean, if there's any chance of stability, there's really good past resistance in here that with the kind of overreaction, if things stabilize, that could be a good. I don't know. I'm going to trim some of my IWM exposure. I ended up taking some good profit on that rip to the upside. Not nearly what I wanted. I did not get the run that I wanted, but I was long with 185 calls and 182 calls and 200 calls, and so I closed out most of those for a good gain, anywhere between like 200 to 300% of those call options. But I also took on some 240 and 245 out of the monies that were dirt cheap, and I did them with debit spreads, and they're pretty cost effective. But I could be risking about 1% of those trades. That right now looks like that's going to be my risk, and I'm probably going to lose that 1%. So where we're sitting is an important threshold, right? I don't think the IWM small cap trades look nearly as attractive as it did when we had this, what I thought was an ascending wedge breakout. I thought we had a bull flag that was looking pretty promising. And if a broader market, healthier broader market was going to be a liftoff, that the Russell could maybe be the catch-up trade. It's still volatile. I get it. Could it surprise us? Maybe, but I doubt it. I think that this would be one of the most ridiculous outperformances of any index if we're going to go ahead and make all-time highs by the end of the year. So probably just going to, eat my lunch on the IWM. I made some good profit. I'm giving back some. There's a Hail Mary chance we get back to the 240 to 245 window, but I doubt it. So at this point, the rest is going to be, what else do I want to do? Well, I could probably start flipping around to some wings, broken wing butterflies. And that's another thing that I'll be watching for maybe this week and next week, is because we have some good IV rank right now in the markets, and implied volatility is massively high. That swell in IV is a good opportunity to look for some trades to short and sell some options. So one thing I could consider is if the IV is high enough, maybe doing a broke wing butterfly up here. In fact, I'll look at that. Let me see if I can. Let me check that one out right now. Let me look at the IWM. Actually, you know what? I'm probably gonna have to go to the RTY. So RTY would be, I could get a little bit more fill on this one. RTY would be my E-mini Russell. So let me go to RTY feed. I already have some broke wings on this one. And you can see it down here. So it's an 1875. That's my pin price. This is out not this Friday, but next Friday. The tail profit's about $1.15 credit. I've got a 10x profit in the peak if I can trap this thing right around this 1875 pin price. I don't know. 1875 is obviously lower. If we throw down a little bit lower, we'd have to drop another 8% in the Russell. If that were to happen by not this Friday, but next Friday, I'll generate probably about $2,000 per account, which is about 1%. Nothing crazy. But that's certainly better than keeping a whopping $115 versus making, $2,000. It's pretty good. So anyway, market's destabilizing more. I mean, all I think you're really seeing there, Def Hunt, is that the market is just every single time it just gets more and more levers. Like, think about the layers upon layers upon layers upon layers of leveraged instruments that are out there. That's the problem. And that's why this type of event is so noisy and ugly and scary, because you take all these things, instead of just having the S&P 500 at, let's say, 100 million shares, okay? Instead of having this, and that's all that you can have, what you have is you have a layer that represents another 100 million shares, and a layer on top of that with another 100 million shares, and a layer on top of that. So all these derivatives that are put on top of the actual nominal value of this asset are why these deleveraging events are so bad. Because when all of a sudden these are looking bad and scary, and it's like dump it, dump it, dump it, dump it, dump it, dump it, sell everything, that's when we have all this chaos. That's what today is, right? So look, this is this is essentially 2022 accelerated. I would call this the deleveraging of 2022 2.0. Whatever, call it something fancy if you want to, but that's what it feels like, right? I posted this in my Discord today. So right here, when I got into my chat this morning, I just said, we're going to remember today. This is either Volmageddon 2.0, the 10-2 reversion, the Fed misstep, the Asia meltdown, or some type of, deleveraging 2.0. That's what it feels like. That's what it looks like. And then we come back to prices, for the week and for the day. Things are just getting started. There's a lot of trading ahead. If we close today green, okay, great. I would say that what's going to be a key metric for this week, price action wise, is that we don't fade it hard and close in fresh lows. If we're going to stabilize for the week, great. Okay. But I don't think we're just, if we rip straight up and we close the gap by the end of the week, okay. I'm still super skeptical, but I'd be much happier seeing that happen. If it does happen, I'd love to see it, right? If it happens, then I'm going to be selling broken wings, and I'll be repositioning. I'll start minimizing some of my futures exposure. I'll be doing all sorts of stuff if the market just uses this as, a week to buy everything. But I do think that rip is short term, because if we came up there, I'd turn into a bit more of a, corrective move, and we have a channel or something like that where we go high to low, lower high to lower low, and we have another downturn that maybe tests this level. And then we really see what the market's made of. And this is not happening immediately, but we're going to see what the market's made of maybe at those April lows. But I think we'd be breaking some pretty big milestones if, historically speaking, the first half of the year is positive and the second half of the year is absolutely atrocious. That usually doesn't happen in the markets, But right now we have look, think about it this way. If the clock is running, it's countdown to Jackson Hole. For step one, would be countdown to Jackson Hole and countdown to the rate cut in September. which right now the rate cut probability is now jumped up to 90+% that the Fed's going to cut by 50 basis points. I don't know if that's the case. Maybe it is. Maybe it's not. Would this be now a disappointment that the Fed can cut rates by 25 basis points and the market's going to absolutely hate it? I don't know. Does this change over the next 3 to 4 weeks or the next 5 or 6 weeks before we have that September 18th decision where all of a sudden it's going to be, I mean, look at this. There's a 10% chance that the market's going to see a 75 basis points cut. Like, this is probably a little bit overstretched. So I'd be interested to see if this goes down a little bit and then pops up another histogram that says 25 basis points, right? And we go to that 5.25 versus going emergency cuts. Maybe. Because if things can stabilize and the Fed can just cut based on inflation, not cut versus the softening economy and this potential uncertainty, then I think that shows a bit more resiliency in the economy as opposed to what we're experiencing today, which is, oh my gosh, the sky is falling, right? Because I know that's what it feels like. So, all right, on that note, I'm going to jump. I got another trading room to get into here in a minute. So thanks for being with us today on the show. I know we had some big numbers today. 1,800 plus viewers out there on YouTube and Twitter. And if you're not out there, like and subscribe, all that good stuff. Play the game with YouTube algorithm if you like the content. We're doing our best to bring good stuff every single day. So Nick, Frank, team at A1 Trading, thanks a lot. As always, we'll have a busy week ahead. And yeah, if you're interested in following me out there, I've got some stuff as well. I know they'll post my stuff in the links, my YouTube channel, my Discord, and additional services. So feel free to check it out. And happy to help. All right, talk to y'all soon. Thanks. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.